Veteran Millionaire Academy, welcome to Alpha Course, opening the door to $1 million wealth. I'm Rex Stitt, one of the co-founders of this community. I just want to thank you first off for taking the initiative to educate yourself on how to use the VA loan as a powerhouse investing tool. I'm a consumer just like yourself. I transitioned out of the Marine Corps after about 6.5 years of service. I knew I wanted to own some property, but I didn't quite know how to use the VA loan to actually earn income. I started looking at single family homes, and I, by happenstance, came across Devin Ortiz and Chris Catania, veterans just like myself, but award-winning real estate professionals in their respective fields. And I did a 30-minute consult, and they convinced me that I can use the VA loan as an investing tool, and I can think a little bit bigger than just going single family. I did just that. I purchased a $1.6 million property, a triplex in a beautiful historic San Diego neighborhood. And now 2 years post-execution of the deal, this has had such a great impact on my life that I reached back out to Devin and Chris, and I said, I want to package up this content, package up this blueprint, and provide it to other service members and veterans. And we did just that. So Alpha Course is designed to expose you to and teach you how to actually use this incredible loan product that we have available to us as service members and veterans to actually earn passive income and change your life on a trajectory towards financial freedom. So first and foremost, we're going to go over my personal case study, the Marlboro case study. And after that, we're going to talk through how can you actually execute this plan yourself. Veteran Millionaire Academy, welcome to my San Diego triplex. I'm Rex Stitt, one of the co-founders of VMA, and I'm here to represent the everyman in this course. I'm not a real estate professional, I'm not an agent, I'm not a lender, I'm a consumer just like yourself, and I followed Devin and Chris's blueprints to land this $1.6 million triplex in a beautiful historic San Diego neighborhood. So, let's walk the property and break down the deal. When I transitioned out of the Marine Corps after 6.5 years of service, I knew that I wanted to invest in some property. Now, I also was investment minded in the sense that I wanted something that was going to earn some income for us while at the same time providing a primary residence for me and my family. This property was the perfect fit. It's on a large corner lot. It's a triplex with 2 buildings on the parcel, 1 duplex, and 1 3-bed, 2-bath main house for me, my wife, and my daughter to live in. Now, for our specific investment strategy, we decided to invest in short-term rentals. While that entailed a little bit more upfront work like furnishing, paying for utilities, getting the internet set up, we found that San Diego as a vacation hotspot allowed us to surge our income very early on in the duplex or the rental side of our property. Now, this specific property layout also provides for great separation between our primary residence, which you see on the right side over here, separated by a fence from the rental side entirely. Additionally, on the duplex side or the rental side of the property, on the downstairs is a studio adjacent to a garage unit. Now, ultimately, the long game is to convert the garage into a unit in itself and turn this triplex into a fourplex. Now, in the meantime, you have to find a way to win and look for creative opportunities to earn income using the space. In my case, I use my garage for my mattress resale business. You can see we utilize the left side of the garage for our own personal storage, and the right side I've capitalized for my business. That way I know I'm still generating income using the space in a creative way while I'm waiting to save up to actually convert this garage into an ADU or an accessory dwelling unit. When it comes to using your property in a creative way to earn income, you can look beyond just the physical structure like this garage. Let's say that you have an empty lot on the property. You can use that for RV storage, just like our other co-founder, Chris Catania, or one of our other students who uses their property for dog training or dog Airbnbs. You can also use it as a wedding venue or a venue in general. You're only limited by your creativity, and remember, look beyond the physical structure and think about how you can use your property as an entire parcel. All right, let's take a look at the rentals. Now, during our home search process, we spent about 3 or 4 months analyzing deals, touring properties, looking for the perfect multifamily investment. We even went under contract on a property that ended up falling through due to lack of transparency from the seller. It's important to note when you're investing in multifamily versus single family, you often won't be able to tour the site or tour the property until you're actually under contract and you've gotten an offer accepted. That was the case for this property. One of the things we fell in love with when it came to this property was our ability to privatize each of the units to include our own primary residence and create these beautiful spaces that feel private for each of our Airbnb guests. This also allowed us some flexibility and some adaptability when it came to potentially converting this back to a long-term rental, because everyone loves to have their own private space when it comes to where they live or where they stay. The beauty of the house hack is that you can adapt this strategy to whatever the layout of your property is, whether it's single family or multifamily. You can seek to privatize individual spaces within a unit because people love to have their own space, whether that's a single family home where you're renting out a room and not sharing a common space, but actually coming up with dividers inside the home so that you never have to see that person. It all comes down to your individual preferences and your individual investment strategy as to how you can leverage the house hack to maximize your rental income while at the same time owning a property yourself. All right, let's take a look at the smallest unit on our property, our downstairs studio. It's approximately 400 square feet, but just this month we're able to bring in over $4,000 in net rental income just in this small space using Airbnb and other short-term rental hosts. All right, so what you're looking at is the fully renovated and furnished version of this unit. It's important to note that this entire property was the ugliest property on the block. Now, the reason that we were able to afford renovations across the entire property to include this small 400 square foot unit and able to pump about $10,000 just in surface level and non-invasive rehabilitation and updates was our ability to negotiate seller credits at closing. That allowed us to maximize our savings, not towards closing costs, but towards actually rehabbing and getting these rental units up and running so that we could have income flowing in and then slowly renovate our primary residence side of the property. Now, when it came to rehabbing this particular unit, I want you to picture linoleum tiles, popcorn ceiling, mustard yellow shower tiles, old decrepit toilet, broken down water damaged vanity. This is all what we were walking into. Now, just within 2 months and a lot of do-it-yourself work, we're able to do some finishing level work, non-invasive, to turn this unit around very quickly, to not only make it look pretty in the pictures for Airbnb guests, but to actually increase the equity position on the property and to force some appreciation very early on in the project. And we specifically surged our efforts on the rental side to get the money flowing so that we could focus on our side a little bit later. We recommend you do the same. All right, so this is our 2-bed, 1-bath upstairs unit. In the first 6 months, guys, this unit was pulling in $6,000 to $7,000 a month. And that was a combination of short-term and mid-term renters. Let's take a look at the unit. Now, while the studio unit was vacant when we purchased the property, this upstairs unit came with existing tenants. Those tenants had been here for 15 years prior. It came with some inherent risk when we factored into our investment strategy and our decision to actually close on this deal, but it was a calculated risk in the sense that we knew and understood the California state law when it came to tenant protection. We knew and understood city and county regulations, and we'd also talked to a real estate attorney to know what's a fight that we might potentially have to get into in order to get these tenants out who are significantly below market rents and didn't allow us, while living there, to actually rehabilitate the unit. This is where some calculated risk comes into play with your investment strategy. When it comes to multifamily investing, there's a good chance that there's going to be existing tenants inside of one, if not all of your units. If you do the right contingency planning and understand what's my close of escrow, what are the required periods for notice to vacate in my particular state, county, or city, and what do I actually owe these tenants before I essentially kick them out of their current dwelling place. Understand these things, have some contingency plans in place in the case that they do gridlock, they put up a fight and don't want to leave. In our case, 15-year tenants very well could have put up a bigger fight than they did, but ultimately we provided the required 60-day notice. They left prior to that 60-day notice being up. We were to get in quickly and rehabilitate the unit. This is where there's a bit of a crash course in being a landlord when you invest in a multifamily property, and it's important to follow the tenants that we present in this course, do your homework, and go in with a primary plan and some contingency planning when it comes to how do I deal with existing tenants inside of my units. There's also an upside when it comes to existing tenants in one of the units. You can actually leverage this as a negotiation tool when it comes to winning an offer or negotiating prices or seller credits with that particular seller. It's much less of a selling point to buy a property with existing tenants, but if you're willing to accept that calculated risk and do your homework, provide the notice, maybe even after close, this is potentially going to give you a huge leg up on your ability to win some gems of a property as a multifamily investor. And a quick final tip from myself and my family, it's important to humanize this process. We didn't want to come in hot, boot these tenants as fast as possible who had been here for 15 years and relocate them just so we can serve our investment strategy. It was important for us to communicate in an effective way with the tenants, make sure they knew that they were heard, make sure that we empathized with them, gave them ample time to pack up, to leave when they needed to, and ultimately be good stewards of this property that we acquired. All right, let's talk numbers. So before I mentioned that we purchased this property at just a hair over 1.6 million, this meant that we had to put down a 1 to 3% earnest money deposit, which translated into about $15,000 up front. Ultimately, when it came to the closing process, we were able to recover that earnest money deposit because the sellers provided a $64,000 seller credit. Now, in addition to recovering the earnest money deposit, the seller credit also covered a 2-to-1 interest rate buy down, which meant that our interest rate was 2 full percentage points below market average in the first year. So from 6.65 to 4.65, and 1 percentage point below market average the second year at 5.65%. Additionally, we were able to negotiate Section 1 termite clearance, as well as a $10,000 roof overlay covered entirely by the sellers. This was all in addition to that seller credit. So when it came down to closing, we were truly $0 out of pocket outside of a voluntary inspection fee of only $1,200. All right, let's talk a critical step in the acquisition process, and that's inspections. Now, for my wife and myself, inspections is not the opportunity to cut corners or to save time or money. We wanted to pay for thorough inspections and do our due diligence for the peace of mind to know that we were paying for something that didn't have issues beyond what we were willing to take on. You can absolutely waive inspections and use that as leverage during the purchasing process or negotiations. In our case, we chose not to do that because we wanted to know that we weren't getting in over our heads and save the time, money, and headache down the road for some very expensive repairs that we didn't see coming. In our case, we did a general inspection, plumbing to include cameras down pipes, electrical, roof, termite, and foundation inspection that ultimately provided us the findings that we needed to see in order to negotiate certain repairs from the seller. The findings that came out of the inspection report ultimately provided ammo to our real estate agent to again use as a negotiation tactic for seller credits and for the seller to actually take care of those repairs and cover the invoices at closing. In our case, this is where that Section 1 termite clearance came out of, as well as that $10,000 roof overlay. Now, the two biggest lessons learned for us when it came to the inspection process and the closing process in general was, first off, negotiate at every turn of the deal, and then trust your real estate agent. And we were able to trust our real estate agent because we went through the vetting process that we teach in this course, and we were comfortable with giving Devin the autonomy and the ammo from the inspection report to negotiate on our behalf and to fight in our corner. Case in point for this one, at the very end of the closing process, I get a call from Devin while I'm at the gym, and he says, hey, I want to use a negotiation tactic that's going to sound like we're putting it all on the line, but ultimately I want to threaten to walk away from the deal if the seller doesn't cover the $10,000 roof overlay. We knew that we needed that money for the rehab costs going into the rental units, but the gut check was I didn't want to lose the property based off of $10,000 in a roof overlay. I ultimately decided to trust Devin, maybe against my initial better judgment, against the initial advice of my wife, but it ultimately paid off because Devin was able to negotiate and seal the deal on a $10,000 roof overlay that was money back in our pocket. And that's where I say negotiate at every turn, be prepared to put it all on the line, and trust your agent as long as you've gone through that thorough vetting process that we recommend. To close out my personal case study, I want to encourage you as a consumer just like myself and every man who's not a real estate professional that doing a deal like this is very possible for you. I live on a modest dual income with my wife. We work W-2 day jobs, but ultimately we were able to make this deal possible because we followed the tenets that are taught in this course, and we followed the blueprints presented by Devin and Chris, and ultimately landed this beautiful $1.6 million triplex. That's now a future investment for our family and something that we can leverage into future deals or our dream home later down the road. I also want to say that when I first started the home purchasing process, I was looking for single family homes. We were thinking kind of small when it came to just owning a piece of property. I ran into Devin at an open house randomly. He convinced me to think bigger. He convinced me to think investment minded, and months down the road, after following the blueprint, we landed this beautiful property. You can absolutely do the same. So I challenge you to buckle down, learn this content, expose yourself to the processes of the home buying process using the VA loan, leverage the VA loan as a powerhouse investing tool, and best of luck as you continue on your real estate journey.
My name is Devin Ortiz. I'll be one of your instructors here at Veteran Millionaire Academy. After serving hundreds and hundreds of VA families and getting them unprecedented deals in the industry, being ranked number 4, not just in America, but in all of North America and the United States territories, I'm going to be bringing you the fundamental aspect of real estate, dealing with the contracts, what properties to purchase, how to protect yourself, the inspections, all the disclosures, everything you need to know about the actual property itself, and what fundamental thought process do we need to go into this home search thinking about how to execute at the highest level. Because just being able to get a home is not enough here at Veteran Millionaire Academy. You must get the most juice out the squeeze. There is times where you need to flutter the gas pedal, and there's times that you need to put the gas pedal on the sellers in order to get more credits, because we can pay off your truck, we can pay off your credit cards, all of your personal debt, not just including the structure. So there's a lot of things that we're going to be covering throughout this course. We couldn't be happier to have you, and I'm going to give you all my blood, sweat, and tears that I've dedicated to learning and understanding this profession, as well as all my successes, my experiences, and my failures, building a multi-million-dollar real estate portfolio with the VA home loan and $0 down. What is the VA home loan? Obviously, being in the military, we got to know a little bit about the history of whatever it is we're doing. The VA home loan was established in 1944 as the Service Members Readjustment Act. Now, this will continue to evolve over time. So that's why what you knew previously about the VA home loan may not be applicable today, and most likely isn't, because they will consistently change and evolve this loan product over time for your personal benefit. Oftentimes people think that you're actually attaining the VA loan through the VA themselves. That couldn't be further from the truth. You're actually securing the VA loan through your mortgage institution or your banking institution of your choice. And then the VA is backing your loan product 25%, even though you're putting down $0. So you're not actually going to the VA to secure your actual loan product. You're going to your financial institution, and then the VA is going to back you and your loan product 25%, even if you put down $0. The VA loan generally has more lenient guidelines, higher debt to income ratio, more flexibility going through the qualification process, which is a benefit for us, the consumer. Allows us to get into homeownership sooner rather than later.
So talking about flexibility and easier to qualify for, what does that mean? And what does our VA entitlement and that insurance the VA offers us get us? Well, it gets us no down payment, which gives us a huge advantage over the rest of the marketplace. It also gives us no private mortgage insurance because the VA's insurance takes the place of that private mortgage insurance. What you need to know about private mortgage insurance is it can be several $100s a month. If you have more questions or you want to see how this is adding to your affordability, you can click the link down in the bio for mortgage insurance and you'll get some additional information on how that works and what it is. It's definitely going to have more lenient guidelines, easier to qualify for. Our debt to income ratios are allowed to go higher. Our loan program is underwritten based on affordability, not some general metrics that are put in place by some bank. You're going to have much lower interest rates. Oftentimes, rates are going to be about 0.5% lower on your VA home loan than they are for the regular marketplace, giving you a huge advantage both in payment and qualification and affordability.
Not to mention, if you have a bankruptcy or foreclosure, you're still able to get your VA home loan back, and oftentimes within 24 months.
Welcome to the Alpha course. I am one of your instructors, Chris Catania, and over the course of the next couple modules, we're going to be digging into a little bit more of the financial aspect and the preparation for obtaining the financing with the VA home loan. I am a lender. I have been doing this for nearly 2 decades. I have guided thousands of veterans and their families into homes, help them utilize their benefits, and invest using their VA home loan benefit. I'm one of the top VA lenders in the nation. I'm one of the top 1% lenders in the nation, and I have been doing this for quite a long time. This is my first big boy job. Besides my time in the Army, in civil affairs and psychological operations, this is where I have done the most training and done the most knowledge gathering so that I can educate and empower you guys to be able to take advantage of your home loan benefit, maximize it, but also make smart financial decisions. I'm going to help you shape a budget. I'm going to help talk you through setting financial goals and things that we don't always think about, or we don't think about in a meaningful way, and we aren't deliberate about it. We're going to teach you how to be deliberate to make sure that we're making the right decisions. I personally have used my VA home loan most recently to buy a fourplex in a coastal community in San Diego, $1.7 million fourplex. But fast forward in 20 years, that property is going to be worth $5.4 million. Currently, today, current real estate portfolio just under $5 million with what we own right now. Future appreciation is going to essentially double that. And that has all been done through low to no down payment, utilizing the VA home loan, and very little cash out of pocket. But it's all been done with the right financial information and with the right mindset and making good, sound financial decisions, which is what we're going to teach you how to do in the next couple modules. Let's go. All right, so let's talk about shaping your financial goals. Now, the biggest part about this and where people often have trouble is they don't have goals and they don't know how to set them and they don't know what to look for. So the first thing that we're going to talk about later on in this course, one of the materials that we're going to give you is how to shape a budget. One of the most important things is having a detailed understanding of your budget and what you can truly afford. The VA home loan gives you a ton of flexibility and wiggle room, meaning in a lot of cases, you may qualify for more than you want to spend. Financing and affording are not the same thing. And most people falter or they don't make good decisions. They don't make confident decisions when they haven't gone through a detailed budgeting process and they don't know exactly what it is that they can afford. Going through the budgeting process is going to allow you to see exactly how much money you have left over every month, and it's going to help you shape what houses you should be looking for and what kind of a purchase makes the most sense to you. Putting a budget together can also help you determine what kind of a property you should be looking at, because maybe a multi-unit makes more sense because of the added rents, maybe single family or condo because of some of the things that are covered in, let's say, an HOA with a condo, make home ownership more affordable for you. This is not a one-size-fits-all process, and your budget should be tailored to your specific financial situation. What I would say and what I would urge you against is thinking that you understand how much money you have available after your new potential mortgage payment. Because I'll tell you right now, I've been doing this for a long time, and one of two things usually happens. Either one, people find out they actually have more disposable income than they thought, and maybe they can afford a little bit more of a property and they end up making a better decision because they get a property maybe that's more in line with what they want, or they go through this process and they find out, oh shit, I don't have as much money left over every month as I thought. And if I'm left with this, it's going to make things really tight. And what you don't want to do is you don't want to go into what for most people is the biggest purchase of your life and have questions or doubts. Because as soon as you sign that contract and you're in escrow and you're 14 to 30 days out from getting those keys, it becomes much more real. And you want to be able to go to sleep at night knowing that you've made the right decision and that you are doing the right thing. You're buying the house that you can afford and the investment is sound. It makes sense. You've checked and balanced it. You've done the budgeting and you know. So we're going to give you a downloadable, fillable budget, which is really helpful. It's going to help you just get a baseline going. There's also some digital apps that you can use. I personally have used the app Every Dollar. It can be really helpful. So you can kind of have it on your phone, and as things change, you can make quick updates. You can do the same thing with the PDF, but some people are cell phone digital folks. I'm a little bit more analog. I'll even write my budget out by hand. That's just how I am. So we'll let you make those decisions. But step one in shaping your financial goals is knowing what your finances look like and setting financial goals. And your budget is one part of that.
So, are you eligible? You are eligible if you serve during any wartime for 90 days on active duty. So, for those of you that are active duty, 90 days after being on active duty, you do meet the VA eligibility. Now, it depends whether you can live off base or not so early on in your career. Depends on your service requirements. We're not going to get into that. We'll get into that on a case-by-case basis when you contact us directly. We also have someone that can pull your certificate of eligibility, so make sure to contact us immediately if you're looking to get your certificate of eligibility, because we have someone that can do it in as little as 5 minutes. Then for those of you that are reservists or National Guardsmen, listen up, because you either need 6 good years in that National Guard or reserve status, or you can also get on 90 days of active duty or temporary active duty orders. This includes your state activations of Title 32 and not just federal orders of Title 10. Title 32 does count. That's one of the new changes in the past few years. It can be fire missions, it could be border missions, it could be mudslides, it could be riots, you name it. It could be working at the unit in a service capacity, non-training capacity, because training days don't count, like your AT and all that good stuff, but in an actual doing your job role and wearing the uniform, 90 days on active duty, that is accumulative, not consecutive, and we can get you qualified. We just helped someone that got denied by 4 other lenders, and they're big names that you know that I'm not going to go ahead and repeat on this video. It's typically the most common that us military folks go to. We're denied by all 4, and then the person that we put them in touch with fought with the VA and got their certificate of eligibility when the other 4 lending companies could not do it. And then if you serve during a peacetime, which we're currently still on this day of 2024, so technically in a wartime, 90 days counts. But if it's peacetime, you just double that amount, 180, 181 days during a peacetime, you're good to go, and you do possess the VA home loan.
Let's talk about how your VA home loan benefit stacks up to some of the other commonly used loan programs for other people that are looking to start a real estate portfolio, buy their first home, or get into investing for the first time. The reality is, when you're comparing your VA loan to conventional or FHA, there is no comparison. The VA is a far superior loan product and program. It is one of the most powerful benefits that you get through your time in service. And I'm going to take a little bit of time to explain to you exactly why it's better than some of these other programs and why you would choose to use a VA loan as opposed to a different loan program, regardless of what somebody might tell you. There is a lot of misinformation. I have had countless veterans tell me that their real estate agent told them that they should use a conventional loan because it was better than a VA loan, which is total and complete bullshit and nonsense. Your VA loan is the most powerful loan program. The difference is, are you working with somebody who understands your benefit and that can advocate for you so that you can use your hard-earned benefits? Now, number one, the VA is going to have far more flexible guidelines than either FHA or conventional, meaning you can have less than perfect credit. There's no minimum credit score on a VA loan. You can have a higher debt to income ratio because your loan is not underwritten on how much your debt to income ratio is or the amount of bills you have as compared to your income at a fixed percentage. It's underwritten on how much money you have left over and can you afford to support your family with those funds. It's a totally different criteria than other mortgage programs and allows you to qualify for a lot more house with the same level of income. The other part is you don't have private mortgage insurance. Private mortgage insurance is an additional insurance policy that essentially you take out and you're responsible for every month that only protects the bank. And it's there because you put less than 20% down. You have this insurance premium that if you default on the loan, you stop making your payments, that mortgage insurance makes the lender whole for the difference of what you put down versus 20%. That does not exist with the VA loan because the VA insures your loan for you. So you don't have to worry about that. And depending on where you're buying and depending on what kind of loan program you're using, that could be $300, $400, $500, $600 a month in savings. Now, the VA loan is the only loan that allows you to pay off your personal debt with a seller credit, with money from the seller. So you can go into your offer and say, hey, seller, I want to buy your house. I want to give you the price that you want for it. But in order to do that, I'm going to need X amount of dollars in credit. And those credits can go towards paying off your debt. We've had dozens of clients that during the process, they get a credit from the seller that they use to pay off a vehicle or credit cards. And that is the only loan program. The VA is the only loan program that lets you do that. So it's got more flexible guidelines. There's no private mortgage insurance. You can pay off your debt with the seller's funds, and you have no down payment. The most commonly known feature of the VA loan is no down payment. This is incredibly powerful because even when you compare it to loan programs that require a down payment, when you add in the elevated interest rates, because VA loans have significantly lower interest rates than conventional or FHA loans, big picture for the most part, and you add the mortgage insurance in, it's usually hundreds of dollars a month that you save in comparison to those other loan programs, even with those other loans requiring a down payment. So your VA, hands down, there is no comparison. In the comparison of loan programs, it is no comparison. The VA loan is a far superior loan program. I am going to put a slide on the screen right here, and I'm going to show you a side-by-side of the exact same purchase scenario using a national average for purchase price. And I'm going to show you side-by-side a VA loan, a conventional loan, and an FHA loan. And you can see on the slide that's on the screen how much different the payment is as compared to the VA loan because of these other factors that exist with these other mortgage programs. Do not let anybody talk you out of using your benefit. Do not let anybody tell you that the VA loan is an inferior loan product. You just need to find somebody that can advocate for you, that understands the benefit, that's lived the life, and does this every day. And later on in our Bravo and Charlie series, we'll actually teach you how to find those people. You're actually going to get a resource at the end of this course that's going to help you select a real estate professional and a lender. And we're going to help guide you into what kind of questions you need to ask to be able to find these people so that you make sure you're working with somebody that understands these programs. But then in Bravo and Charlie, we're actually going to take you through how to find a deal, how to analyze the deal, and then we're actually going to guide you start to finish through your first transaction. So bottom line on this one, VA loan program, the most powerful purchase loan in the business, in the game, and you have it. We're going to talk more about how to use it.
Let's talk VA home loan myth busting. One of the biggest myths out there is that it's an inferior loan product to others in the country. That couldn't be further from the truth. It's actually the most superior loan product in the country. Just most people don't know about it because most people haven't served their country. So instead of being honest and transparent with you and letting you know that they don't know much about the VA home loan, they just spread rumors stating that it's an inferior loan product and that you should use something else that they actually know about. So that couldn't be further from the truth. Also, when it comes to the VA home loan, people say that you need a down payment. You do not need a down payment when it comes to the VA home loan. There's zero down payment loan product. That there's private mortgage insurance. There's absolutely no private mortgage insurance with the VA home loan. Also, that if you don't use it, you lose it. We've helped great grandparents utilize their VA home loan for the very first time. So it doesn't matter your age. Also, that you can't have more than one loan product out at a time. It is absolutely possible for you to have one property with the VA home loan and go and purchase another property with the VA home loan. Now, there's some intricate details that get into that we'll get into that in a different course, but just know you absolutely can have more than one VA home loan out at a time. Another myth that we always hear is that there's a cap. There used to be a cap with the VA home loan where you can only purchase up into a certain amount, but that has been abolished. You could literally purchase a multi-million-dollar property like I did, VA zero down. I purchased a $1.7 million property with $0 out of pocket. Also, many people say that you cannot rent out your properties with the VA home loan. That is absolutely incorrect. You can rent out your properties. I rent out all of mine. And that you can't utilize it as an investment tool. That is the biggest myth out there because I leverage my VA home loan as only an investment tool because I want to achieve passive income and positive cash flow to offset the financial burdens of life. So those are the most common VA myths we come across. It is not all of them, but those are some of the most common VA myths that we come across. So I hope that helped you out. Support up. So supporting and investing with a partner. Combine your income to maximize your pre-approval and qualify for a larger and more valuable property with higher earning potential. So yourself and myself, a veteran and a veteran, could go in on a property together. A veteran and a spouse, their debt is your debt is their debt. You're considered one entity. And then what most people, most lenders, about 99% of them in the country are going to tell you, you cannot do, which is not true. This is from the VA guidelines themselves. You can purchase with a civilian, with a fiance, with a brother, a sister, a mom, a dad, you name it. You can purchase with Joe Smo right off the street that you had a coffee meeting and came up with a great idea. A veteran or service member can partner and purchase a VA property and put them on the VA home loan. Now, there is one additional caveat that comes to that. So they are going to require a 12.5% down payment when it comes to leveraging that specific loan product with a non-veteran. Now you may say, why would I do a 12.5% down payment when I can go conventional 3%, FHA 3.5%, conventional 5%, 10%? Because when you measure up apples to apples and you see what the points are, what the interest rate, what the origination fees, what the debt to income ratio, what the caps are and all that, and the private mortgage insurance, you're still going to be way further ahead with a lot lower payment leveraging the VA home loan with a 12.5% down payment opposed to 3, 5, 10% down payment option with other loan products. The truth is that the VA home loan is a powerhouse investment tool that allows you to own real estate and rent it out of any of the following types of properties. You can have a condo or a townhome. You may not know what the difference is, but a condo is like an apartment. You could have someone live above you, below you, to the left of you, or to the right of you. A townhome, you will only have someone live to the left of you or to the right of you because you'll own everything from the foundation to the roof. So if it's 2 or 3 stories, that townhome is 2 or 3 stories. You own the whole thing. A single family residence, your typical home here in America, you got your front yard, your backyard, it's a detached structure, you're good to go there. A planned unit development, you take that single family residence and you put it in a gated community. Maybe you have a park, recreation, clubhouse, pool, security. There's going to be an HOA fee assessed with that property that's typically monthly. And so that's a planned unit development. You're good to go there with the VA home loan. Manufactured homes you can purchase with the VA home loan. Now, there are some specific requirements. It has to meet a certain age of the home or the manufactured home because the building requirements change during that time. So it has to meet that. In addition, it cannot be a manufactured home on leased land. You have to own the land. That's the primary investment, and that's where the real riches and the real gold is at, is through land ownership. So if there's a land lease with the property or there's a fee associated on a monthly or quarterly basis with the land, that is a no-go. That is not VA eligible. And then my personal favorite, 2 to 4 units. You can purchase a duplex, triplex, or fourplex with your VA home loan. So with buying one home, you may be buying 4 properties all at the same time. And the best thing about that is that you don't have to qualify for that entire purchase price all by yourself. Meaning, if you have about $6,000 a month in total income, but yet there's 3 other units and they're all bringing in $2,000 each per unit, you have $2,000, $4,000, $6,000 in additional qualifying income to help you get to that specific purchase price. For example, say you are qualified for $1 million for a single family residence pre-approval. It's very likely that you could purchase, say, a $1.6 million multi-unit because instead of your $6,000 of qualifying income, now you have $12,000 of qualifying income built into your pre-approval. When I'm not working, I'm a consumer just like you. And the very first time I heard about closing costs, I immediately assumed that they were fees associated with purchasing the property. That could not be further from the truth. Closing costs are actually some prepaid items for your personal expenses in addition to third-party expenses. So I'm going to break it down for you real quick. Depending on what state you purchase, you may need to load 4 to 6 months of property tax into an escrow account at close of escrow. Because, say, here in the state of California, property tax is paid out twice a year, semi-annually. Imagine if they came after you for property taxes a month after you purchased the property. You wouldn't have the money available to pay the 6-month increment of property taxes. So that's why it must be loaded into account at close of escrow. Then 1 year of upfront home insurance paid in advance, because at close of escrow, they're going to pay that annual premium in advance. And as you make your payment throughout the year, they're going to go ahead and put a sliver of that payment away to pay your next annual premium. And they're going to pay that on your behalf automatically. In addition, 45 to 60 days of prepaid interest. From the time you get the keys, you don't owe your first payment for about 45 to 60 days. So that prepaid interest must be loaded into the account at close of escrow. Then, not including your lending team and your real estate team, there's about 30 other people involved in helping you get this home. So those are third-party service providers that need to be compensated for their efforts throughout your escrow process. So it may be escrow costs, title costs, notary, recording charges, city, county charges, and fees that are associated with you getting the home, including wiring fees. So that is how you need to think about all-encompassing your closing costs. It is not fees associated specifically for purchasing a home. There is your personal expenses and third-party expenses combined together. Devin Ortiz, your local real estate expert, here to discuss where should you think about purchasing. And that's different for every single person, as well as every single family, as well as their wants and needs. However, I like to go over 5 tips in order to take into consideration when purchasing. Number 1 is going to be studying the area for new construction. Where you see cranes, you should see opportunity, as they've taken a lot of consideration into studying the economic composition and population growth in order to invest that amount of money in developing the area. Number 2 is going to be next to a place of employment. like a hospital where there's a large influx of working professionals that could rent your property. Number 3 is going to be a military installation. Why? Because you have service members that get paid a substantial amount for housing allowance that always need a place to live. Number 4 is going to be a university because you always have students and faculty that will be able to rent your property in case you're not owner occupying it. Number 5 is going to be next to a body of water. Whether it's a lake or an ocean, people always pay top dollar to live by a body of water.
All right, you have either just completed the mini course and you're taking a look through the other things that we offer, or you've just completed the alpha course and you're moving on to the Bravo section. Either way, we hope that you have enjoyed the program. I hope you've enjoyed the course and you have a great foundation for executing on your benefits and understanding what the true possibility is and how it can impact you, your family, your long-term wealth, and your overall financial security. In the Bravo course, we're going to dive a lot deeper. We're going to specifically look at analyzing different deals. We're going to look at how to use your VA home loan product to buy a multifamily property and use it as a money-making and wealth-building investment tool. And we're going to dive into exactly what you need to know to be able to execute that correctly. We're going to help you look at a deal and analyze the deal just like we do, being professionals and doing this every day and having served hundreds, if not thousands, of families. We're going to teach you some of the things that aren't really common knowledge, like how to operate with a property manager, how to find a Rolodex and a network of service providers so that when something happens, and if something happens, you have the people that you need in your network to build on that success and have the best opportunity of making a successful investment, keeping it long-term, accruing equity, accruing wealth, and overall just executing the plan that we're going to put in place. Bravo dives a lot deeper into the intricacies of that. Now, not only that, but you are going to get some of the other added benefits. You're going to get access to our online community. You're going to get access to 12 online group coaching calls where we actually go through and take a look at specific deals in real time and talk through how to maximize them and give ideas and insight and guidance to veterans on how to use this the right way, and also just pour into them from what we've experienced and what we've learned over the course of the last 2 decades doing exactly this every day, day in and day out, using the loan product ourselves, using it to buy single family, condo, multifamily residential. We're going to help you analyze these deals and figure out the best way to execute. You're going to be on our email list. You're going to get things of value, case studies from some of our recent closings and our student successes. You're also going to get some bonus time. You know, every once in a while we'll throw out a bonus course or a bonus piece of material or a Q&A session that is off the schedule, but just something extra that we give to the community because we want you guys to win and we want to give you the best opportunity to win. We're going to give you our smart packs. Specifically, we're going to give you a roadmap on how to find a lender and a real estate agent that are actually experts in this field. Not just know it or say that they understand it or have done it before, but there is a difference between somebody who is familiar with your benefit and your loan program and how to work with veterans, and there's somebody that's a true expert. And there's some qualifying questions and some things you need to know when you're selecting your agent partner or your mortgage partner. That's what they are in this. They're not just a service provider. They're not just somebody checking a box and getting a job done. They're your partner in this transaction. Your ability to succeed, your probability of success is directly tied to how good they are at their job, and that is a fact. We're also going to give you our deal analysis tool. This is something that we've put together so that we can quickly and effectively navigate if this deal makes sense or not. Is it a good investment or not? What are the things that I should be aware of? It helps you identify holes, and then it also helps you maybe see when a deal might be better than it looks on the surface because of the way the numbers shake out, and you can quickly input the numbers and get this done. It's really, really useful. We're also going to put you into a consultation with some of our other partners, our sister companies, if you will, or our partnerships out in the marketplace that work with other facets of your VA benefits. There is a lot more to the benefits that you've earned through service than just the VA home loan. There's obviously educational benefits, there's employment benefits, there's health care and disability benefits, and we believe in a holistic approach with our clients. Now, I'm not the expert in that. I don't do that every day, but I've gone and done the research and I've sought out the very best in those fields so that I can, again, add them to that Rolodex of partners. And then when I have a client or a student that comes to me and needs help navigating their benefit, I know exactly where to send them, and I know that they're going to get top-notch care and attention, and they're going to be dealing with the best of the best, because that is what we do here. So we're going to put you in touch with that. All of those things all together, if you were to pay for those individually, would cost you about $5,000 to do so. When you purchase the Bravo course, if you click the link below and you purchase the Bravo course, you actually get all of that for free. It's thrown in just with the Bravo course. So you're going to build off of, if you haven't already taken the Alpha course, purchasing the Bravo course is going to give you full access to Alpha. Alpha is opening the door to $1 million wealth. Bravo is, now that we know what this is and how it works and some of the details and specifics behind it, how do we actually execute it in a practical application? That is what Bravo is all about. It's about execution. So when you do that, you get access to Alpha. If you haven't already taken it, if you have, you'll get full access to it. You can retake it if you like. You're going to get access to the full Bravo course offerings, and then you're going to get all the different extras at a $5,000 value, completely free. It's going to be thrown in because you've taken the course, and we want you to continue to build on it. We want you to be successful. That's what this is all about. Yes, it's a business for us, but for on the other part of it, not just the business aspect of it, a rising tide lifts all ships. We want everybody out there who's earned this benefit to be able to maximize it, take advantage of it, and get ahead. You earned it, and it is severely underutilized. We know that. That is why we put this course together. So click the link below, register for Bravo, and I will see you on the other side.